And we're live.
Great. Good afternoon, everybody. This is the Hyperwave channel. And with us today again is Sawcruhteez. Leah is still on the road for the next couple of days. I spent the morning talking to several clients about the current positioning in both Bitcoin and the US stock market. And in doing that, we spent a lot of time looking at the charts, trying to understand a bunch of cross currents that are going on. And I thought this would be a perfect time to vlog a kind of a deep dive into the technical side of what we see on both Bitcoin and the S&P 500. We'll use the S&P 500 just as a holder for all the US stock markets. We're not going to break it down into sectors or mid cap and small cap. We'll just use the S&P 500 because that's the driver of most of this stuff. And this will be fun for me because we're going to just do it live. Sawcruhteez and I haven't compared notes on the charts. And so we'll get into a lot of detail about how a number of different systems are giving slightly different signals and what they might mean. So with that, what we'll do is go right to screen share. I'll pull up my Bitcoin chart first, and then we'll comment on that. And then I'll let Sawcruhteez bring up his, and then we'll do the same thing on the S&P 500. I think that's the best way to do it. So first of all, let me just put this guy up, and then I will pull up my Bitcoin chart that everybody's seen a million times, but I haven't changed any of the lines on it because things are getting pretty exciting right now. So there is the Bitcoin chart of the entire hyperwave, starting with the long phase one. Can you see that okay?
Yep.
Okay, great. Starting with the long phase one, the movement in this phase two, the acceleration in phase three, and then the vertical into phase four, the break of phase four, which is the sell signal, and then a sharp move back up from 11,000 to 17,500, which I interpret as phase 5 and 6, and everything since then, including where we are today, is phase 7. Okay, we all know that I've been talking about that for 17 months, this chart. And then things got funny, and there have been a million questions, mainly comments, but some questions. And question number one is 1,000 still the target on this hyperwave? And the answer is yes. It's the only target on any hyperwave, which is the phase one line, going back to the phase one line. So that is still in play, regardless of the fact that we are buying Bitcoin, and this is a bull market, not just a bounce. This is a bull market according to Consensio, which has nothing to do with Hyperwave. And those listeners that have learned both systems know that they're totally independent, and sometimes two independent systems will give you different answers, not because either or both of them are wrong or right, but because they're measuring different things that at various points in time the other system is not measuring. Right now, Hyperwave can make no comments about this price action. It's done its job. It gave us a phase 1, phase 2, phase 3, phase 4, a break, a phase 5, a move back up, a phase 6, and then it even gave us a test of the old phase 3, which could have been a funky hyperwave, and then it gave us a test of the old phase 2, which could have been a funky hyperwave, neither of which worked, and now there's nothing left. The only thing left is phase 1, which is 1,000. So no matter how many times this thing goes up or down, back and forth, quickly, slowly, over the next day, week, month, or 10 years, Hyperwave says nothing about this price action. This is all phase 7 right up through today. Now, that ends if one of two things happen. One, we hit 1,000, or 2, we go above the old high at 19,666. That's the only thing we're waiting for Hyperwave to tell us. It's done its job up to this point, which means we've got to look at other things in between those extremes. And that's exactly what we're going to do today in quite a bit of detail. What I'm going to do is I want to point to 2 things that I have found very interesting. One is when Bitcoin broke the phase 3 line, I'm going to go to a daily chart to examine exactly what happened there, because a similar thing is going on in reverse right now. But here is the daily chart of when after the break at 19,000, we dropped down to 11,000, back up to 17,000, and they came all the way down to this phase 3 line. Now, on a daily basis, we broke it. That doesn't matter in Hyperwave. Everything is measured on a weekly basis. But this first day, we broke that phase line. The second day, we bounced back and closed on it. The third day, we broke it but closed above it. The fourth day, we touched it but closed above it. The fifth day was completely above it. The sixth day came back and touched it again, but did not break it, and then it took off to the upside. Then, after running up to 11,200, we came back down and tested it. 1, 2, 3, 4, 5, 6 days in a row before it broke. Again, this is daily. But it broke on a daily basis, and then it took 9 more days hanging around that line before it fell away and never got back above it, even though it tried over here briefly. Okay, why am I looking at the daily chart if the only rule we use has to do with the weekly? It's because on that week in which the dailies broke, the weekly did not. We came all the way down to 58.71 and then shot back up by Sunday's close and closed above it. And then we stayed above it for 1, 2, 3, 4, 5 more weeks. Over a month later, that phase 2 line had held. And throughout that period, what Hyperwave was saying in terms of its rules is that if this phase 3 line holds, we can go back up to new highs because this was only in a phase 3. We haven't seen the phase 4 yet. That's what a funky Hyperwave means. Anyway, it did break it, and then after dropping for 3 weeks, came back up and kissed it twice, where the wicks came right up to that phase line, and then it fell away. And we've never returned, and we may someday, if you extend this to infinity, at some point, we might come back to the underside of it again. But this is the one we're talking about now, the phase 2 line. And the phase 2 line did a similar thing. It had a chance to bounce off and head all the way up to new highs, but it did not do it. And that's usually the case. We don't have exact numbers, but I've estimated it's 1 out of 5 times, 20%, either a phase 2 or a phase 3 will continue into higher highs on a hyperwave. But it's a pretty rare thing. We've shown you a number of examples that have happened in the last 20 years, but still it's pretty rare. And I didn't expect this one too. I hoped it would. It didn't, and then we collapsed. But here's what I wanted to point out, where we are right now on a weekly basis. We've come right back underneath that phase 2 line, just the way we came back underneath the phase 3 line without getting back above it. Now, back here, I'll blow this up just so I'm going to now just talk about three things. One is the sequential trading system throughout this period, and the sequential trading system now, and the moving averages at this point, which is the Consensio trading system. As we bounced up to the underside of the broken phase line, we only got as high as a green 5 before turning lower. At the same time, I'm going to take the price off just for a second, and then we'll put it back on. But I want you to see the moving averages as we're coming back up to the underside of the trend line. What happened is the short term bounced above the intermediate, fell below it, bounced above the intermediate, fell below it, but the intermediate was moving down all the way until this sequential 1, 2, 3, 4, and then it slightly turned up. So you had the short term and the intermediate term moving up into that high, but the sequential could only get to a 5 before it cracked, because the price right after what we're looking at began to roll over again. And I think that shows the strength of the underside of an old phase line. Now, what's important is it is no longer a phase line because it broke, but it still is a significant angular trend line. And I can't even guess if it is stronger than a normal trend line because it used to be an old phase line. I don't know, but we are testing that theory right here, right now with Bitcoin. Okay, so my reading is that this is a bounce, that if we can break through this old phase 2 line, and we haven't, I'll show you the daily on this one, just the way we did before, just to show you that the big 6 up we had didn't quite make it to the line. The 7 went slightly above it, but closed below it. The 8 touched it and closed below it. The 9 went through it and then fell apart. starting this 1 to 4 day pullback. And then we broke up and touched it again on this red 3. We got a price flip to the green side, but the price has fallen away instead of going higher after this touch. Now we're slowly working our way up the last 3 days, right back to the underside. So I just wanted to blow it up a little. I'm going to do one other thing. I'm going to take it down to a 4-hour chart to show the persistency of movements above and below that phase line as we move up to it. Now, some of you that don't believe in any of this stuff can draw your own conclusions about, is this significant or not? To me, it's very significant. And because of that, I am watching very carefully for a weekly break. And remember, tomorrow is the end of the week. Right now, we're below it. We're trading right around 8,044 right now. So we are still below it, but we've still got a day and some hours to go in which it could move up and close on a weekly basis above that trend line. What would that mean? I have no idea. Hyperwave, it doesn't mean anything. From a traditional technical point of view, taking out that trend line, which I hope I've just demonstrated is very significant, means something. And I think it means something fairly powerful. And the reason I say that is we are still just on a green 7. So we've got 2 more weeks to go. And Tone's use of sequential and other tools has him with the target of somewhere between the setup trend line, which is coming right below the 9,000 level. Let's call it 89.34. But in any case, it's above the action of the price right here in the trend line. And then there are other barriers. We've got the 9,400, 0.387, 0.3865 Fibonacci line not shown on this chart. And then we've got some more overhead resistance that I think is very strong. So I'm not drawing any conclusions. I'm just telling you from my perspective that I think this is a very important point over the next 36 hours. Then we flip to an 8. And then things are going to start getting hairy, because if we can't get above even this area, it's going to be very difficult to make a lot of progress through all these others before running into a weekly 9. Okay. Now, and then I'll turn this over to Sawcruhteez in case he wants to say anything about this weekly chart. But the other thing that I keep stressing is, because Hyperwave cannot talk to me right now, ever since we broke through the phase 2 line to the downside, it only tells me one thing: we're going to go down to 1,000. So no matter how many times people ask me and say what a stupid thing that is and all that, there's nothing I nor anyone else can do. The rules are the rules. And in the past, they have been unbelievable in terms of how many times they've called the tops and the bottoms. That doesn't mean it's doing it this time. Now, some people are arguing it's because this is such a unique asset. You can't compare it to sugar. You can't compare it to silver. You can't compare it to gold or the stock market or individual companies or individual currencies. And they list all these things you can't compare it to. I completely agree. That's why I think it's got the potential someday of going to these astronomical levels that we talked about in our Medium article, 5 million, 10 million, on and on and on, because it is unique. It's something you can't see, you can't hold, you can't touch, you can't do anything with it. Nobody knows you have it. You don't know if they have it. It's invisible. Of course, it's unique. But with all that uniqueness, I hope I just pointed out for those with an open mind that this unique thing that people are trying to argue is so unique it can't possibly be affected by technical analysis or hyperwave. I've just shown you with tremendous precision how it acts like every other asset class that's ever existed. The only thing missing is a move back down to 1,000. And as I've said, the game ain't over yet. I'm not saying it's going to do it on this move coming in terms of a correction, or if it'll be a year, 3 years, or 5 years from now. All I know is that that is the target that Hyperwave has on it. Okay. Now, practically speaking, we bought in these candles down here. And we did that, as I said, because this long-term moving average for the first time in the bear market turned from down to up, which was the exclamation point on Consensio saying this is no longer a bear market, it's a bull market. Hyperwave is saying this is still a bear market. Consensio is saying it has just become, within the last 2.5 weeks, a bull market. And for those of you that haven't learned Consensio, it's very simple. When the price is above the short-term moving average, and I use 3 moving averages, the 2, the 7, and the 30 simple weeks, 2, 7, 30 simple weekly moving averages. When the price is above the short term, and the price is above the intermediate term, and the price is above the long term, and the short term is above the intermediate term, and the intermediate term is above the long term, and all 3, short, intermediate, and long, are moving up, that's my definition of a bull market. So when that happened, the decision was made to buy close to the support at 6,000. Now, at the time this turned up, we were way above 6,000. We were above 7,000. And on a weekly basis, it took a sharp pullback below 6,800, 6,600, and 6,400 to get us into the market. I'm sorry, it was not here. It was above this green line. On this pullback, what some people are calling a flash crash, is where we were able to fill our orders. And since then, we've held above this area, and we've got stops at various places depending on the clients at various points below the $6,000 level. So we're basically willing to take about a 10% risk on a small amount of money, about 20%. Now, you've heard me say that, but I wanted to explain it in more depth relative to these other indicators that we've talked about before, because we still have some inconsistencies among the indicators on a long-term basis, but not enough not for us to be in the market. Okay, I'm going to stop there, and then I will give you my ideas of what's going to happen if and when we can break above this line and turn it over to Sawcruhteez. Do you want to pull up your own chart, or do you want to make any comments on this one?
Yeah, I've got a chart that I could pull up real quick to point a couple of things out.
Let me just go here and go there. Okay.
All
Give it a
right.
shot.
Pulling up the chart now. And first thing I wanted to say is that I just finished watching the Lucid's Principles of Investment podcast that they did a couple days ago, and wanted to make sure that everyone listening watches that if they haven't already. There were a couple points in there that I wanted to reiterate. Everything is very important information. It may seem kind of simple and straightforward on the surface, But if you really think about implementing the ideas into your strategies and processes, it can be kind of eye-opening in terms of what you're trying to accomplish and how you're going about it. And the first thing was the separating the difference between costing yourself capital versus costing yourself opportunity. Those two are very, very different. And to me, that's one of the most important principles that you can understand and really internalize. If you can really, really internalize that idea, then you're going to be able to get over the feelings of FOMO and being afraid of missing out when the market's running away from you. That, to me, is one of the single most important things that you can do. And that comes from an understanding that there's always going to be another train coming, and also that cash is king. If you've got cash sitting on the sidelines, don't feel like it's burning a hole in your pocket. Feel like it's in a good, safe spot, that you do not want to move it out of there unless there's really a strong trend that is moving up. That's really very, very important topics that I wanted to reiterate very quickly. And the first thing I wanted to go over with you today, since you started by talking about Hyperwave and the Hyperwave targets, and basically how it needs to return to 1,000 or create a new all-time high, or else there's nothing else that can be kind of interpreted from a Hyperwave standpoint. And there is one alternative that I want to offer. Been chatting with a member of the Hyperwave group, Gabriel, and we've been looking at potentially adjusting the phase 1 and phase 2 lines. And that is something that I want to do very carefully by saying that I'm not trying to move the goalposts, and in order to save face, I'm more than willing to admit that I was wrong. If this doesn't return to 1,000 like I was expecting along with Tyler, I'm more than happy to admit that I'm wrong. All along, we're saying that there's little that would make us more happy. We were fans of Bitcoin, and we wanted this thing to be going back up. So if this doesn't return to the phase 1 area, then that's fantastic. I'm more than happy to be wrong. This is just done as a way to present an alternative in terms of a way to view this differently based on Hyperwave that still abides by every single rule that a Hyperwave has. So if we move the phase 1 down to 790, about 775, somewhere in that range, it gives us a potential new phase 2. We break through the phase 1 here in December 2016, come back to retest it, create a new all-time high here, and then here's the first major correction that doesn't come back to the phase 1. Find support at 939, March 20th, 2017. So the rules of Hyperwave tell us that we can connect the first major correction to phase 1 using weekly candle closes. And if we do that, we can see how this just found support right at that area. So again, I'm not necessarily trying to move the goalpost or to backstep on anything that was said before, because this is absolutely not something that I was seeing before. I was absolutely viewing this as phase 2, and this is the phase 2 breakdown. That's absolutely what I was viewing it as. But looking in hindsight and looking at some alternatives gave me this idea. And again, that was after talking with Gabriel. And it looks to me like this could potentially still qualify as a valid phase 2, which could potentially mean that it could turn into a funky hyperwave from here. Remember that for it to return to phase 1, it has to break down phase 2. And it is possible that that everybody basically had the phase 2 drawn incorrectly by using this as the phase 1, and then connecting that first major correction there gives us something along those lines that we're seeing here. So that is just one thing that I wanted to throw out there to everybody, just to keep in mind, to give some thought, just as an alternative perspective, that maybe that we don't have to wait for a new all-time high or a return to 1,000 for Hyperwave to kind of tell us what's going on. Maybe this phase 2 is actually the valid one, and maybe the phase 1 is all the way down at 750 or so, which wouldn't have to be return to as long as we maintain support above this phase 2 line. So nevertheless, if you want to agree with me or not, I think that this is an important trend line. And if you want to think it's phase 2 or not, I do think it's something that's important to be paying attention to, in the sense that if we do have a correction that breaks down the 6,000 area, this could be an area where it returns to and finds some support. So that is something that I'm keeping my eye on. And you did mention how Bitcoin is unique, and in the sense that a lot of people do not want to think that it abides by the rules of technical analysis or hyperwave or anything else. And that's something that I agree with and I disagree with. I definitely think that Bitcoin is unique, but I don't think that it is so unique that it will be able to shirk all of technical analysis. Whereas maybe there are some situations where it can shirk or disregard some of technical analysis. And Tyler mentioned some things that make Bitcoin unique, but I think he missed the one most important thing. And to me, what's most important is the halving. Bitcoin is a deflationary asset that it's predictable when this thing is going to decrease in supply. And that is completely different from anything else, basically, that I'm aware of ever. And because of that, I think that some things could be not as maybe viable, not as reliable, in the sense that if the halving was 2 or 3 years down the road, if we had further to go before the halving date, then it would be much more likely that this thing would have continued down and would be returning to phase 1 sometime this year. Whereas now that we're actually coming up, we're about a year away right now from the next halving, and historically about 1 year before the halving date is when the markup starts to happen. Kind of it starts getting priced in about a year before that actually occurs. So potentially, if this thing is going to shirk the rules of hyperwave, and let's just say that this was the real phase 2 and it did break it down and it did find support before returning to phase 1, for me, the only reason it would be able to do that is because of the halving. So to me, it is important to understand, or at least think about how Bitcoin could be different than anything else, and how that could potentially affect some timing target, some targets that need time to basically develop. So that's what I wanted to cover on the weekly. If you don't have anything to say, I'll zoom in a little bit and show a couple things on some lower time frames.
Well, just briefly, I've been following Gabriel's work, and I find it very interesting. I haven't had time to really go through it and reconstruct it, but I love what the implication is. It's a little hard for me to see the phase 3 and 4 without it being a little sloppy. Maybe not if you connect that one and then extend it up, because it looks like after its break again, you get a bounce back to the underside of that line. So I'll have to just spend some time on it. Yeah, I think that's interesting. That's interesting. And yeah, I will spend some time looking at that, because that would be very exciting if it came right down at 3,100 and hit that line. It's just a little hard. I read what Telegram was saying about that, but I haven't had time to really go and break it down into dailies and then into hourlies and see what was really going on internally with each of those candles. But anyway, very, very cool. I liked that. And I do like your explanation that's what a lot of people, maximalists, have been saying about why it's so different than every other crypto. And I agree with that in terms of we know what the limit is and we know no one can change it without a 51% attack. But as long as that doesn't occur, we know what the supply is, and that's got to count for something. But I still don't know what that counts for in terms of price and price activity. Certainly, all the technical things like sequential and consensual and all of that stuff, as well as what I said about Hyperwave, right up through today, has worked terrifically well. And I would expect it to do that in the future, regardless if we're going up or down, because it still is me selling to you and you selling to me. And depending on who's the most emotional, along with everybody else participating in the market at that time, that's what technical analysis picks up on. Okay, enough of that. Go ahead with your next thing.
Yeah, I was just going to pull this up briefly, and I wish I could give credit to whose it was. I just took a screenshot. It's from the Brave New Coin Liquid Index, and I don't know who put this together, so I apologize for that, but I still did just want to show real quickly an illustration of what it looks like basically when the halving occurs and when the kind of markup starts happening about a year before. So we have halving here, bottom of the bear market about a year before markup starts occurring. We've got the halving here, and about a year before we find the bottom of the bear market and the markup starts occurring. And now we're kind of looking at that similar situation. Halving is right here about a year before bottom of a bear market, markup starts occurring. So definitely a very, very important factor, and definitely seems to be a driving fundamental for bull markets, definitely. So that is something to keep a close eye on. And let me get this pulled back up. So yeah, I will go through, I always try to be as kind of objective as possible and always try to look at market from both sides. And when I'm not really confident where it's going to go, I always just try to look at, a bullish and a bearish case. And that's pretty much what I've got for us today. We'll start with the bearish case, and I will make this basically as quick as possible. But one thing that I did find kind of interesting, Tyler started out by analyzing this price action here as it related to a bounce off the phase 3 line. We got a strong bounce, and then we see how we kind of got this double top action, just like that. And that's kind of what we're looking at here. We see this big run up and then a pullback, and now we've kind of got this little double top action right in here. So to me, these two areas are definitely showing some similarities. Generally, when we get a big run up, I expect the next move to kind of go have this like exhausted move where it runs up a little bit more, and it doesn't go. It's kind of like a swing failure pattern where this swing move was 62 to 75, and this was 74 to 83. So it doesn't move as far as the previous move did, and that's generally when you'll get a kind of bearish divergence. That doesn't really happen here, but that's kind of what I expect to see. Here's a really good example. We get a run up, and then the price just creeps up above this peak while the RSI gets a divergence. It's kind of like a stop run before it really goes in its direction it's going to go. So to me, seeing like this double topping action with the overbought RSI is kind of a little more bearish than a div, because I would expect this to create a new high kind of slightly above here as the RSI pulled back to give us that divergence. When that doesn't happen, that's telling me that resistance is extra strong right here, and that we couldn't quite make it through to get that little divergence, the higher high in the price and the lower high in the RSI. So to me, that's an indication that we're actually a little weaker than we could be. So that's just something that I'm keeping an eye on there. And then Something else is the daily average directional index. Let's take a peek at how that looks. This for me is a really good way to determine if a trend is exhausted versus strong. We want to be investing in strong trends and getting out before they're exhausted is basically the way that I want to approach it. And I think the ADX is the best tool that I have found to do this, because it can kind of identify areas where that's a strong trend versus an exhausted trend, where a TD sequential might be showing a 9, and we don't know if we're going to get another 9 after that, or a correction, or a full-on a small pullback, or a full correction. We really don't know, whereas the ADX can kind of shed some light on that for us. So let's just take a look at the TD as it compares to the ADX. So right here, we got a 9 after a big move. And that TD tells you that maybe this is exhausted, maybe it's going to continue, maybe it's going to pull back. You really don't know. You have to wait and see. Whereas the ADX is much more concrete. It tells you, my kind of rules tell me that if this is between 20 and 40, we're in a very strong trend that is not exhausted, that still has more room to the upside. So we see this 9 here, where the ADX is showing us that this is strong. We're still in an area of strength. We're at 33, opposed to being exhausted. Once it gets above, basically towards areas of resistance, prior areas where it is bound, tends to roll over, that is where I am expecting it to become exhausted. So for Bitcoin on the daily, that's around the 50 range. We see it tends to roll over a lot there. If it makes it through, then it really goes on through for its biggest moves up in this 70 area. So when it starts rolling over after getting all the way up to extremes, to me, that tells me that this thing is really exhausted, opposed to being a strong trend. So this 9 here happened when we had a strong trend occurring according to the ADX, whereas this 9 here happened after we rolled over on the ADX, or as we were kind of rolling over. Now it's continued to roll over and continued moving down. That's telling me that this thing is needing a correction. So that is the few of the main reasons for the bearish case. The other to be aware of is the funding rates. For me, this is a really good indicator for when a squeeze is coming, or when things are too overbought or oversold, when too many people are on one side of the trade. I find the funding rates to be very helpful for that. And basically, anytime the funding rates are positive, that means that longs are paying shorts. Anytime they're negative, shorts are paying longs. I want to see these in about the 0.01%. To me, that's healthy. And either way, it doesn't matter if shorts are paying or longs are paying. That's healthy. That's telling me it's about 60, 40, 55, 45. We've got a balanced trade. That's what I want to see, basically, for continuation, opposed to exhaustion, where once we really start to get above 0.05, to me, that starts telling me that there are too many longs in this trade, and that the longs are primed to be squeezed. When there are too many people on one side of the trade, then it's often that you get a squeeze that will get them out of their positions, basically, which a long squeeze would take the price down, a short squeeze would take the price up. So when you only get this for a short amount of time, when it only happens for maybe 8 or 16 hours, this is every 8 hours, it doesn't tell you much. It's really when it's persistent. When it's persistently above 0.01, up in this range, that's really telling you that it's getting way too expensive to be long. So something to keep an eye on. We're only at about 16 hours now. The predicted rates looks like it's going up in 15 minutes to 0.07%. So longs are going to be paying even more here in 14 minutes. So it does appear that that is persisting. So something to definitely keep an eye on. Those rates are also very high on Ethereum. Okay, so moving to the bullish case, and I am actually in a small long position due to what I'm going to show you here. And I am really liking how the price has been finding support above the 50 EMA on that 4-hour chart. So 2 days ago, I mentioned to keep an eye on the 9 EMA and the 50 EMA, as it looked like there was a trend line I had drawn in right in here. Looked like it was being broken down on this candle, closed below the 50 EMA and was spending time there. I pointed back to here showing that if this crosses, that's confirmation that this trend line basically is broken, and then I'm expecting return to this area. If it doesn't, then we could see something similar to this. And when we got this candle here that closed above not only the 50, but also the 9 EMA, that's when I was starting to look to go long. And that was just showing me that support is holding strong. Basically, at the end of the day, the most important thing to me is supply and demand and higher lows. Here we got a higher low telling me that there's a lot of demand. Despite us increasing significantly, I'm still seeing a lot of demand where the pullback's getting bought up quickly. So to me, that's very important. Now, this trend line is no longer valid, but it appears that the price is forming an ascending triangle. That is one of my favorite patterns to trade. Can be very reliable, even though when a lot of people will see it, it still just shows that support is coming up. Support is coming up. Resistance is holding, but it's thinning. Every time we come up and test it, it's thinning. It's thinning. Support is holding. We get higher lows, and we're not necessarily responded with lower highs. It's kind of more of a horizontal area of resistance that we're coming back up to potentially retest. So I started building longs in this area, and I've got orders right up in here to add. I'm also longing Ethereum. It is looking very, very strong. Recently had a golden cross on the daily, tons of volume on the breakout. And it is lagging significantly behind Bitcoin in terms of it hasn't even returned to its major support that it held it above in 2018. So that is my analysis on Bitcoin. And anything that you wanted to add there, Tyler?
No, that's some fantastic stuff. I like that funding rate analysis a lot, because that gets right into the guts of what the traders are feeling. And that's very important. And I also like the way you're using these exponential moving averages, and it sure looks as if this wants to break above. What's interesting, if you just picture what we were looking at with my chart, that there's this phase 2 line coming right in above these tops on this triangle. And so what's going to be important is, are we going to be able to take those out, in which case you are also going to break this triangle to the upside and then come to the underside of all that other resistance. So that's some terrific stuff.
Appreciate it. And just realized I forgot to share the measured move. If we do break above the ascending triangle, that would be 9,700 or so, which is right in line here with this prior, the next kind of horizontal resistance zone. So if we do get above here, the 8450 or so, then that will be my target, is a return to there. And if that does happen, it will definitely be on kind of exhausted indicators. So it'll be something to be very careful about if that does occur.
Well,
all right. So
that's great stuff. We are kind of running out of time here. I think we will skip the S&P for today, only because this is a 3-day weekend. No one can do anything anyway. But before Monday's close, we will do an in-depth analysis on the price of the S&P and the technicals on the S&P right now. And we're also going to have an upcoming part 3 of our series on the Selgin trading system, because a number of very unusual things are happening in the US stock markets that almost nothing else is picking up, but the Selgin trading system is. And there are a couple of anomalies that are occurring. Now, luckily or coincidentally or fortuitously or serendipitously, next Saturday, a week from today, we're going to be doing a 4-hour in-depth analysis from 12 to 4 of the Selgin trading system. When we gave our first Hyperwave workshops, a lot was happening. And when we gave our first Consensio workshops, a lot was happening. It seems for some reason that the same thing is happening again with the Selgin trading system. And we've had a terrific response from people that have begun looking themselves at the pattern and have been sending in all kinds of very interesting observations. Sawcruhteez has been doing a lot of work, and earlier today he showed me a couple of things that quite frankly blow my mind. And one of the reasons I don't really want to talk about the S&P right now is because of some of the implications I'm seeing from some of the work that he did using the Selgin system. In any case, one quick advertisement again. We are filling up pretty quickly, and thank you all for that who have already signed up. As far as I know, we don't have a limit on the number of people in this webinar. We had limitations before at about 100 on some previous webinars, but we blew through those. So we expanded the number that can listen or watch or download it later if you can't make it on Saturday, June 1st from 12 until 4. I believe we are up well above those numbers, 500 or so, before we run into actual transmission problems or the ability to let people get in. But if you just read what Sawcruhteez has brought up from our website, it goes into basically what we're going to talk about, which is not only the pattern, but how it's been used historically and how we are using it right now on a number of very interesting securities and indexes. And we've shown you 4 or 5 of them over the last couple of days where we were talking about Selgin. We're not really talking about Selgin today, but what I'm telling you is we will have at least 1 and maybe 2 more vlogs before the webinar with a number of examples, including some of these newer ones we found. Now, when I paid Wells Wilder Jr. back in the late 1970s, I paid him $600 to learn his system. On our webinar, we're charging $150. It's true that on our Hyperwave webinar, we charged a lot more, and we have to do that for a number of reasons that we'll go into at some other time. But the uniqueness of Hyperwave and the fact that no one had ever seen and worked with them before makes it a pretty valuable property to Lucid Investment Strategies. And that's one reason that Sawcruhteez has spent so much time writing the book about Hyperwave. We will probably do the same thing with Consensio and Selgin at a later time. But since we had never really talked about the Selgin trading system before, we thought we'd like to get it out to the best audience we could at what we think is a very reasonable price. It's 1/4 of what I paid somebody almost 40 years ago to teach me the system. And I am telling you, you are going to find tremendous application for it. And it's the kind of thing you're not going to have to sit day by day by day watching things happen on a screen. It's a very long-term technique of pinpointing tops and bottoms of major moves. And it just so happens there are a lot of major moves that have been going on for many, 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 many years that are forming this pattern. And we'll go into what could that mean, not only for each of those individual things, but for the economy in general, the stock market in general, and Bitcoin specifically because of the implications of the macroeconomic picture. So anyway, thank you very much for tuning in today. We've taken up an hour of your time, and we are glad to do it. Thank you, Sawcruhteez, very much for all of that great analysis on Bitcoin. And in the next several days, we will be doing one for sure on the S&P and the U.S. stock market. And with that, adios, Sawcruhteez. Any last words?
Yeah, thanks for having me on. One last thing I wanted to say is that some of the main feedback that we've gotten from previous webinars was people wanting some notes or some sort of study guide. We do go over a lot of information in a very short amount of time in these webinars, and if you're not very proficient at note-taking, then you might feel like you left some behind. You will get a copy of the video afterwards, but still you might want some stuff in a Word document or a searchable document. So that is some feedback that we've heard loud and clear that I'm going to make sure for this upcoming webinar that everybody does get a study guide that's very comprehensive with a number of charts and a number of just kind of small paragraphs describing what you're looking at. It's currently already over 26 pages and still has a little bit to go. So along with the webinar, you can expect to get a very comprehensive study guide that may end up providing the foundation for a book on the Selgin system in months or years to come. So that was what I wanted to say. Thank you very much for having me on, Tyler, and I will look forward to the next webinar.
Okay, great. That sounds terrific. And Sawcruhteez is jumping on an airplane and coming to Chattanooga. Leah is jumping on an airplane and coming to Chattanooga. And we're going to spend 3 or 4 days together talking about a lot of very interesting projects we're in the middle of. So with that, can't wait to see you, Sawcruhteez. Thank you, everybody. And talk to you all later.
All right.